I think that the inflation challenge is still absolutely with us. Inflation's come down, but it's still above the RBA's target on an underlying basis. And actually, if you dig a bit deeper into today's numbers, the unit labour cost measure, which has been a big focus for the RBA. So this looks at sort of how much wages growth relative to productivity is, and how strong wages growth is relative to productivity, and it's actually quite strong. So wages growth has been gradually lifting, and productivity has continued to look quite weak. In fact, today's numbers show it continues to be very weak. This, I think, will remain something that will keep the RBA, will be in the RBA's focus. And in fact, even though the economy is slowing down, as I described, and they're getting what they wanted in terms of growth slowing and inflation passing its peak, our expectation is actually it's still likely that the RBA is going to have to lift interest rates a little bit further yet. What I'm saying is that we're on track at the moment. We're on that pathway that the RBA governor described as a narrow one, where growth needs to slow, but they don't want to deliver an outright contraction. But we need a slowdown in growth in order to get inflation to start to gradually head back to target. Doesn't mean the RBA doesn't have to lift interest rates a little bit further, and in fact, that's our central case. They may very well have to do a little bit more yet, probably later this year.
Can I just quickly ask you, because we're almost out of time, but just in terms of all these things that you're mentioning, they're all within the domestic context, in terms of the fiscal impulse that is providing for a lot of support on the public side. If we're talking about the GDP, you are seeing that the weakness coming through in consumption, obviously. You've got the net benefit of migration, all of these things that are, confluencing in order to provide a little bit of resiliency. But is China then the big risk, especially considering commodity pricing is already falling off a cliff? If we don't see any improvement there, is there enough in Australia to offset any significant downturn?
So China is a risk, and we need to watch it very carefully. But let's work through that. Exports were actually quite strong in the numbers that we got today. The export volume numbers are likely to continue to hold up. And as you rightly point out, the way this will manifest itself, if it were to be, the downside risk would manifest itself in further falls in commodity prices. That would give the economy less income, there'd be less mining profits, there'd be less tax revenue and so on, and that would slow down income growth. But right now, the government is actually trying to save money. They're trying not to pour that income back into the economy. And right now, the mining companies are conserving capital. So we're not seeing that sort of mechanism at work in the scheme of things. So it's probably less influential than it has been normally, even though I wouldn't rule it out as, obviously we need to watch China. It's our major trading partner, but it's less influential than it's been in the past. And in addition to that, of course, Chinese policymakers are busy pulling levers, lots of them at the moment, to provide support for their growth.